Hello, this is Mijun Woo from Bigju Ceylon University. Let's begin today's Bigju City News for July 24th. Welcome once again to Mijun Woo, where we consistently uphold the fundamentals of investing in United States stocks. Today, we'll start by reading two comments left by our valued subscribers. The comments I'll read today touch on a point I've emphasized several times recently, and it's coming up again. So, some of you might be annoyed, wondering why I keep repeating the same thing like this. In my opinion, these two questions are so important that even if it feels a bit repetitive, I want to talk about them once again. The first comment is from someone using the username Seok Yoon and Seo Young. After securing additional cash, my cash ratio is now close to 50%. With the greed index high and the possibility of a short-term correction along with some good news, I can't seem to find the right timing to buy. Maybe because of the Trump news, stock prices are going up, and as a beginner, I'm feeling uncertain. You expressed your anxiety by saying, I don't know what the wise move is right now. As for the cash ratio, honestly, there is no right answer. Because some investors can sleep peacefully even with all their money in the stock market, while others still toss and turn at night when stock prices fall, even if they have 50% of their assets in cash. So whether a 20% cash ratio is the right answer, or 30% or even 10% really depends on the individual. You can think of it that way. Now, as for the person who left this comment, you said that your cash ratio is close to 50%, but you're worried that the stock prices might keep going up. That means you have even more cash than usual. In my opinion, when deciding your cash ratio, it should be set so that you have no problem whether the stock prices go up or down. I've often mentioned the specific number of 20% on the show. The reason is, when I have about 20% in cash, I feel good whether the market goes up or down. If the market goes up, I feel good because 80% of my funds are already invested in stocks, so I benefit from the rise. And if the market drops sharply, I still feel good because I have 20% in cash, which I can use to buy more stocks. So depending on the investor, you should adjust your cash ratio to the level where you don't get shaken emotionally whether the stock price goes up or down. That's what I want to tell you. But right now it seems like you, the subscriber, have a bit too much cash, about 50%. That's why you feel emotionally shaken when the stock price goes up. The most important thing for successful stock investing is to let go of greed. The reason you're holding too much cash right now is because of greed. You're probably thinking, if the stock price drops soon, I'll buy a lot. That's where the greed comes in. So, I'd like to advise you to reduce your greed a little and maintain a position where it's okay whether the stock price goes up or down. Now, today I'll read another comment for you. This is from someone with the cool username, Life Starts From Today. Miju, I've been quietly subscribed to your channel for 3 years, but this is my first time leaving a comment. Around last December, I bought the MAGS Exchange Traded Fund. It crashed hard until June, but now it's back to my original investment amount. When it recovers to the original amount, would it be better to sell or to keep holding it? Since it's an exchange-traded fund, I bought it because it's stable and had good returns. It was listed in 2023, and I think the one-year return was about 70%. What do you think I should do? They asked, please, I'm begging you for an answer, please. Because you used the word please, I just couldn't ignore it. And you've been subscribed for 3 years, but this is the first comment you've left. I gratefully accept it. All right, first of all, let me repeat something I emphasize very often. If you look here, after you bought the stock, it plummeted until June, and now it's recovering back to the principal. So you asked whether it would be better to sell when the principal is recovered or to keep holding it, right? That's the wrong question. Because the recovery of your principal has nothing to do with the actual value of this exchange-traded fund or stock. When you decide to buy or sell a stock, the only standard should be whether you think the stock will go up from now or go down from now. That's the only criterion. I really don't understand why people decide to sell only when the price returns to their average purchase price. Why is that even a standard? If you evaluate a company's value based on your own average purchase price, this is what happens. You end up making irrational investment decisions, and that can't lead to good results. So I want to emphasize once again that whether I recover my principal or not has nothing to do with the value of the stock. This is a really, really important concept. Now, there's one more thing. If you look here, you're investing in Exchange Traded Fund S, but I want to ask if you actually know what kind of Exchange Traded Fund this MAGS Exchange Traded Fund is. Let me show you for a moment. MAGS is the Round Hill Magnificent 7 Exchange Traded Fund. So it's an exchange traded fund that invests in the Magnificent Seven, which we usually call mega tech companies. We can figure this out right now. Now, if you look at the holdings, in other words, the stocks it owns, there's something a bit strange. First of all, if you look up here, you can see it says United States Treasury bills. What this means is government bonds. This exchange traded fund invests 59.41% in government bonds, so more than half is currently invested in government bonds. Now, if you look here, it says these are government bonds that don't pay interest. What does that mean? There are government bonds that you buy at a discount. So these aren't bonds that pay interest, but rather you buy them at a bit of a discount when you purchase them. Anyway, the important thing is that nearly 60% of the total investment funds are currently in government bonds. You can see this as an effort to maximize stability. So if you look at it up to this point, this exchange traded fund might not be able to keep up even if the Magnificent Seven stocks go up a lot. On the contrary, you can infer that its volatility would be very low. If you look below, there's something else mentioned. The second largest holding is Nvidia, the third is Microsoft, then Tesla, Alphabet, Amazon, and Meta. As expected, the Magnificent Seven are included now. But if you look after that, you'll hear the term swap. Swap refers to derivatives. So this is an exchange traded fund that uses leverage. If you look Nvidia, Microsoft, Tesla, all these stocks are not investing in the actual stocks themselves, but are investing in derivatives. So by holding government bonds, this can help defend against stock price drops, and at the same time, if stock prices surge or fall sharply because leverage is being used, it can go up even more or fall even more. This is a very complex product that we need to keep in mind when investing, and that's what I want to tell you. So, in conclusion, for me, I don't really understand how this exchange traded fund works. They also control the water pressure as they please. Moreover, with government bonds exceeding 59%, I personally find it unappealing. And if you look at the fees, the expense ratio fee is 0.29%. So even if you invest about 100 million won, about 300,000 won goes out as fees every year. And if your investment capital is as much as 1 billion won, the fees alone exceed 3 million won. So when investing in these major United States megatech companies, you can just buy equal amounts of the 7 stocks or buy a bit more of the ones you like. Just buy these 7 stocks. Is it really necessary to pay these fees and invest in ETFs that even include these derivatives? Personally, I have some doubts about that, and that's what I want to explain. To the person using the identification, "My life starts today," I hope my answer addressed your question. Here is the United States stock news for July 24th. Let's begin. Today, I'll summarize the current United States stock market state, starting with the S&P 500 map. It's filled with a very pleasant color. You can see some red here and there, but it's quite limited. So overall, we saw a very good trend yesterday, with most of the top 500 companies rising. Most of the tech stocks we love also showed an upward trend. So the market breadth has really expanded. In fact, over 75% of stocks are showing a good short-term trend, and the percentage of stocks with a good long-term trend has also improved to 63.14%. Now, what it means when the market breadth expands like this is, I want to emphasize once again that the possibility of stocks plunging in the short term is very low, and this can be interpreted positively. Now, next is the volatility index. It has dropped all the way to 15.30. A level of 15.30 is very low for the volatility index and is something you rarely see. The current market's fear index is nearly non-existent, indicating minimal fear. It can be summarized that many people are investing with a very comfortable mindset. The fear and greed index has now risen to 77. Therefore, in the short term, you can see that the market is entering a phase of extreme greed. The market score provided by Choa's Tagi has also risen again to 85. Therefore, we can't deny that the current atmosphere is very positive. Nevertheless, I have expressed to you that there is a high possibility that the United States stock market will continue to rise further. Even yesterday, when all the artificial intelligence beneficiary stocks fell, I mentioned to you that there would probably be additional buying coming in. There was only one reason for that. So many investors had a negative outlook, and as a result, those people had already left the stock market. The current upward trend wasn't created by a lot of investors coming in at the same time. Instead, you can see it as some investors going all in, which caused stock prices to rise significantly. So, there was a lot of waiting capital that had left the market and was on standby. As this money keeps coming back in little by little, you can see that the upward trend is being prolonged. So it's very important to check how the current American Association of Individual Investors survey results are changing. Last week, 39.3% were predicting an upward trend, but this figure has dropped to 36.8%. Now, what that means is it's become similar to the average. Now, you can see that investors with a positive outlook are showing historical average levels. Now, the red line is important, and it has dropped to 34%. Last week, I mentioned that 39% of investors had a negative outlook, believing that stock prices would fall in the next 6 months, and from our perspective, I said that was actually a good sign. The reason is that the historical average is 31%. So there were a lot more investors betting on a decline than the average. This means that there were many investors holding on to cash and praying for the market to fall. As these people start buying more stocks, the upward trend could last longer. That's why this outlook is possible. In fact, of the 39%, around 5% no longer expect a decline. So they thought, it's going up now, gave up and bought stocks. That's why the percentage dropped to 34%. You can see it that way. So, at this point, it's actually more negative compared to last week. That means the percentage of people holding cash has decreased that much. So, it's necessary to keep monitoring how much this figure decreases, and if this figure drops below 30%, then that would be a sign of overheating, and we should actually increase our cash holdings at that point. That's how we can interpret it. Next, median topic will perform, with market indices rising 0.78% and the Nasdaq up 0.61% yesterday. The atmosphere around median topic was very positive. First of all, Talon Energy has been soaring for several days, and yesterday it achieved an additional 8.18% increase. Celestica was also very good, plus 7.57% for Credo Technology, plus 5.90%, Vistra Corporation, plus 5.83%, Palantir, plus 3.73%, Trade Desk, plus 3.62%, Advanced Micro Devices, plus 2.54%, Taiwan Semiconductor Manufacturing Company, plus 2.44%, NVIDIA, plus 2.25%, Broadcom, plus 1.83%, Meta, plus 1.24%, Amazon, plus 0.36%, and Tesla went up by 0.14%. On the other hand, 7 stocks fell. First Solar dropped slightly by 0.12%. Bitcoin minus 0.13%, Alphabet minus 0.58%, Bit2 minus 1.50%, Coinbase minus 1.64%, Uber minus 2.02%, and MicroStrategy fell by 3.2%. So yesterday overall, cryptocurrency-related stocks didn't perform well. There was a technical correction. They've been performing well lately, right? And if you look at the top side, artificial intelligence beneficiary stocks generally surged yesterday. So you might be curious about why artificial intelligence beneficiary stocks jumped like this. I'd like to briefly explain about this. Yesterday, there was a very big piece of good news. There was news that President Trump announced an artificial intelligence implementation plan. Regarding this, I'll give you a clear summary through Mi-jun's words. The artificial intelligence implementation plan announced by the Trump administration this time is very detailed, and it is expected to have a direct impact on specific sectors and companies. There are 3 pillars to this plan. The first is innovation, the second is infrastructure, and the third is international diplomacy and security, as announced. So in my opinion, the following sectors are likely to benefit the most, and I will summarize it this way. The first sector is artificial intelligence infrastructure. Specifically, it's where data centers, energy, and artificial intelligence beneficiary stocks are concentrated. This is the sector expected to receive the most direct and significant benefits from this plan. That's because the Artificial Intelligence Implementation Plan announced yesterday, the key point is to build and keep building. In English, it's build, baby, build. So the most important thing is to keep constructing more data centers. Now, if you look at the main policies, they plan to expedite permits for building data centers and semiconductor fabs. So the main point is that they will help make it easier and faster to build semiconductor factories and data centers. Which companies are expected to be affected? First of all, the first ones are data center real estate investment trust operators. Real estate investment trusts refer to real estate, and these are companies that lease real estate for building data centers. The main examples are Equinix and Digital Realty. Second, power and utility companies are also very promising, and the reason is very clear. As you know, artificial intelligence data centers consume a tremendous amount of electricity. Therefore, companies like Vistra, Constellation Energy, and Talon Energy have had the opportunity to surge, and that's how you should see it. Third, server hardware and cooling solution providers are also expected to benefit greatly. So, companies like Dell Computer, which makes artificial intelligence servers, Supermicrocomputer, and Vertiv Holdings, which is a cooling company, are included. Companies like Credo Technology and Celestica can be considered beneficiaries that stand to gain significantly. That's how you should view it. The second sector is semiconductors. What are the main points of the policy announced this time? They said they would encourage the construction of semiconductor manufacturing facilities in the United States, and there was also a negative point about strengthening export controls on semiconductor manufacturing and addressing loopholes. Well, even so, most of it is positive. Integrated device manufacturers such as Intel and Texas Instruments, which design and manufacture semiconductors, are a good example, especially now. Foundry companies that focus solely on manufacturing, such as Taiwan Semiconductor Manufacturing Company, can also gain from this. They're building large-scale production facilities in the United States. Now, fabless design companies are also expected to benefit. NVIDIA, Advanced Micro Devices, and Broadcom are representative examples. And finally, as the number of factories continues to increase, semiconductor equipment will also sell well. Therefore, companies like Applied Materials and Lam Research are also expected to benefit. The third category is artificial intelligence software and service companies. For example, cloud service providers will likely see a lot of additional demand. So, companies like Microsoft with Azure, Amazon with Amazon Web Services, and Google with Google Cloud could continue to see a surge in demand. The fourth area is the defense industry and specialized sectors. In this area, the announced policies include building high-security data centers for the military and intelligence agencies, and there were announcements about promoting the adoption of artificial intelligence within the Department of Defense and the United States government. So, as soon as you hear that, a company immediately comes to mind, Palantir. Because Palantir is unrivaled as a defense contractor and government information technology company, it's likely that Palantir will continue to win many contracts in the future, so we can have high expectations. Lastly, it seems that the demand for cybersecurity will also surge. Naturally, as data centers continue to be built for the military or intelligence agencies, information security becomes extremely important. Therefore, it can be concluded that the demand for cybersecurity companies like CrowdStrike, Palo Alto, and SentinelOne may also increase. Yesterday, the earnings reports of the megatech companies we had been waiting for started to be announced. As the first runners, Tesla and Google announced their earnings. Before I share the earnings results with you, I have some good news that I'd like to share. Now, if you look here, there's an article on Korea Economic Television saying that the analysis of Tesla's earnings was the fastest. The article says that Edgar Flash, an artificial intelligence-based investment news service, has been launched. Now, I don't know if you remember Edgar Flash. We call it Apple News for short, and Chief Executive Officer Kim In-jung has been actively promoting this service. Let's take a quick look. Data Hero, which operates the global investment information platform ChoiceTalk United States, is launching a new artificial intelligence investment news alert service for investors called Edgar Flash. Data Hero announced that in order to bridge the gap in overseas stock information, it has developed Edgar Flash, a real-time investment news alert service based on an artificial intelligence investment analysis system following its previous all-stock trading signal service. Edgar Flash is a comprehensive artificial intelligence analysis system that combines 8K electronic disclosures from the United States Securities and Exchange Commission, with NASDAQ and Chilsudak United States data owned by Data Hero in real time. The artificial intelligence analyzes disclosures from United States, listed companies, extracts key investment information, conducts ultra-fast analysis of stock price impacts, and provides customized services for stocks of interest. That's how it is introduced. And it is confidently stated here that Edgar Flash provided the fastest breaking news in Korea by delivering Tesla's earnings announcement, which was released on the morning of the 24th Korean time at 5:16 anti-meridian. Reading this article, I wondered how happy Chief Executive Officer Kim In-jung must be. And if you look here, it says that in the case of Tesla, it took about 16 minutes. Alphabet was even more impressive. Yesterday, Alphabet, Google's earnings, if you look here, the breaking news came out at 5:03. It shows an incredible speed being reported in just 3 minutes. Let me read it for a moment. The headline says second quarter revenue was $96.4 billion and cloud jumped 32%. The artificial intelligence of choice DAC now analyzes it in this way. Alphabet's second quarter performance is overall very good, especially with a 32% revenue growth and improved profitability in the cloud business standing out. Double-digit growth in the search and YouTube businesses through artificial intelligence technology integration is also positive. The $85 billion capital investment plan demonstrates a commitment to accelerating future growth and, along with strong performance, is expected to have a positive impact on the stock price. That's how it was summarized here. In fact, Alphabet's stock price didn't move at first, but later it started to surge. Let's take a look. Where is Alphabet's stock price? Here it is. Right now it's up 3.1%. So, as artificial intelligence predicted, we're seeing a positive trend in the stock price. Now, there's also a 3-line summary. Q2 sales hit $96.4 billion, a 13% YoY increase with earnings per share, growing 22%. Cloud sales soared 32% to $13.6 billion more than doubling operating profit. Finally, it concludes by highlighting the $85 billion capital investment plan for 2025, which will reinforce its top position in artificial intelligence tech. Of course, if you have time, reading the entire article will be even more helpful. Now, from here on, I'd like to go over only the most essential parts of yesterday's Tesla earnings and the key points from Google's earnings announcement. First, let's talk about Tesla. There were several very important points made during the Tesla earnings call, and I've summarized them. Compared to the previous quarter, the management's optimistic stance on autonomous driving and humanoid robots remained strong, as you can see. However, directly expressed concerns about changes in government policy and tariffs are causing the stock price to fall. That's how you should see it. Elon Musk also showed confidence in future industries such as robots, taxis, and humanoid robots. But what he said was, we could go through a tough period for several quarters. He admitted that. Elon Musk and the Tesla executives pointed out the negative factors in great detail. The Inflation Reduction Act is eliminating the electric vehicle tax credit. Second, there is the increase in tariffs, and third, the reduction of regulatory credits. So they mentioned that there are these 3 immediate major risks. Specifically, Chief Financial Officer Tan Haija said that the full impact of the tariffs will be seen over the coming quarters. So this quarter there was actually no significant impact, but starting next quarter, the results could get worse due to the tariff impact. He left this as a warning message. In addition, the abolition of the New Year notice and the energy business credit issue will affect demand and profitability. He made these negative remarks. On top of that, the management also said, they delivered somewhat disappointing news that the production increase of the low-cost model, which investors had been eagerly waiting for, is progressing at a slower pace than initially expected. Therefore, they announced that this will only happen in the next quarter, the fourth quarter, which means it will be achieved by the end of this year. In addition, they mentioned that the production increase of the Optimus robot could also be slower than expected. Ultimately, the earnings call was filled with optimism as they discussed numerous positive points. They discussed self-driving cars, robot taxis, and humanoid robots, stating that the company will ultimately achieve all goals and become the market leader. They presented a highly optimistic outlook. The problem is that the actual current performance figures were not very good, and all the progress on various innovations for future performance was also negative. There have been a lot of disappointing updates, like things are being delayed and everything is progressing at a slow pace. Therefore, in my view, it will take some time before you can make a significant bet on Tesla stock. What I mean is, I currently have Tesla among my 20 stocks, but the amount of investment is very small. Therefore, in order to invest a large amount of capital in Tesla like I do with Nvidia or Palantir, I still need to wait. It will likely take quite a bit of time. I'll wrap it up here. Next up is Google's earnings conference call. I'll briefly summarize only the important points from Google's earnings call as well. First, let's briefly take a look at Google's earnings results. There are several points that Chief Executive Officer Sundar Pichai emphasized. First of all, search revenue recorded double-digit growth. This part is very important. Now here, search and other revenues grew by as much as 12% year over year. So right now, there are a lot of investors worried that Google search might be failing. So far, it's still maintaining a healthy performance. Now, secondly, the new artificial intelligence-based search feature and artificial intelligence mode have been successfully launched in the United States and India. They currently have something they're proud of called Artificial Intelligence Overview. When you search now, a summary appears below it, right? This artificial intelligence overview has more than 2 billion monthly users across 200 countries and 40 languages worldwide. That's an incredible number. So you can see that this new feature, Artificial Intelligence Overview, is now carrying on the lifeline of Google Search. Another positive aspect is that Google Cloud also performed really well. They delivered the good news that revenue, order backlog, and profitability all maintained strong growth. But the most important thing in this earnings report was this. For 2025, the facility investment, capital expenditures outlook was raised by $10 billion from $75 billion to $85 billion. At the end of July 2025, they announced an additional $10 billion in spending, despite it being late in the month. Now, this includes additional investment in servers, and they say that the main reasons are the delivery dates for servers and the acceleration of data center construction. And in 2026, additional CapEx increases are expected. So, not only in 2025, but also in 2026, they said they would invest more than their original plans. Now, this is a really important point, so I'd like to talk a bit more about it. Investors who are betting on artificial intelligence beneficiaries, especially semiconductor stocks like Nvidia and advanced micro devices or infrastructure stocks like Credo Technology, I believe you should also pay close attention to the earnings results of companies like Amazon, which owns Amazon Web Services, Microsoft with Azure, Alphabet providing Google Cloud, and Meta. So in my case, I think it's very wise to invest at least a little in these companies. In fact, I actually own shares of Amazon, Google, and Meta. Because the capital expenditures and facility investments of these hyperscaler companies ultimately lead directly to the revenues of artificial intelligence infrastructure providers that supply things like artificial intelligence, semiconductors, and networking. Therefore, by looking at the earnings results of companies like Amazon, Alphabet, Meta, and Microsoft, we can ultimately predict the earnings results of companies that provide artificial intelligence, semiconductors, and networking. On Wednesday, Alphabet commented on its capital expenditure outlook for 2025. Raising it from the previous $75 billion to $85 billion, an increase of $10 billion, and also signaling additional increases in 2026 is very significant, because it can be interpreted as a commitment to focus all efforts on securing data centers, servers, and artificial intelligence accelerators to handle the explosive demand for artificial intelligence services and cloud. So, I believe that this is clearly good news for the related companies. The uncertainty about demand has been resolved, but no one knows how long these companies will continue to benefit from this. But once again, Alphabet said that they need more than expected this year and even more next year. Therefore, it is expected that this will be seen as a signal that strong demand is guaranteed at least until 2026. So, after the market closed on July 23, and even in the pre-market today, on July 24, major stocks are showing very strong price increases. NVIDIA's stock price is currently surging 4 to 5% in the futures index. That's because it's the most direct and representative beneficiary stock. Artificial intelligence accelerators like the H100 and B200, which we call GPUs, are used in Google's artificial intelligence data centers. Nvidia is still supplying most of these, so the number one beneficiary is Nvidia. This fact hasn't changed, Secondly, advanced micro devices is also going up by about 3%. Because many companies are now choosing advanced micro devices MI 300X GPU as an alternative to NVIDIA. That's how you can see it. And when the overall pie of the artificial intelligence market grows like this, in the end, NVIDIA alone can't handle it. That means the supply can't keep up, so you can see that the demand for advanced micro devices could also surge. The third one is Broadcom. Broadcom's stock price is also going up by about 2 to 3% right now. Broadcom is the company that makes Google's self-developed artificial intelligence chip called the TPU. Broadcom is the one that manufactures this TPU. And there's one more thing. Broadcom is also the strongest player in the field of networking chips that connect the servers inside data centers. So you can see that Broadcom benefits from both sides. And Credo Technology is now surging more than 6%. That's because Credo is a company that provides communication solutions that connect chips to chips and servers to servers at ultra-high speeds inside data centers. Therefore, as the scale of artificial intelligence data centers grows, as more GPUs are densely connected and the system continues to expand, the demand for Credo's products can increase exponentially. That's how you can look at it. And also, the stock Celestica is up about 5%. What Celestica does is, they receive GPUs made by NVIDIA and advanced micro devices, assemble them into servers and racks, and supply them as hardware to data centers. So, what about Alphabet's announcement this time? It's giving the market confidence that the artificial intelligence investment cycle won't be short-term, but will continue at least until 2026 or next year. So now, investors are starting to expect that companies like Microsoft, Amazon, and Meta, as well as other hyperscalers, will continue to invest at a similar level. And if similar plans are announced in the earnings results of Microsoft, Amazon, and Meta, it will provide strong growth momentum across the entire artificial intelligence infrastructure supply chain. Then we can expect additional stock price increases. Now, as for me, being able to invest in these leading American companies at the early stage of the artificial intelligence revolution, I once again thought that this might truly be a great blessing for our generation. Now it's time to deliver today's final content. Recently, at the end of my Medium broadcast, I've been including things like today's United States stock video or the Medium podcast to share with you all. Today as well, I found a lot of good content. For example, Gene Munster from Deepwater said that Alphabet stock could see a significant rise in the next few days. That means Google's stock price could go up a lot. And if you look here, Dan Ives from Wedbush appears. Dan Ives is saying that Tesla's earnings results this time are not bad. And next to it is the Mijun podcast that my wife and I made. To buy Bitcoin or not to buy, that is the question. We put together a podcast with this kind of topic. There's one more thing. If you look here, it says that institutions currently hold a lot of short positions. Because of that, the recent rally in the United States stock market has been getting stronger. Therefore, this summer, the market may perform much better than anticipated, according to some experts. But in today's case, I'd like to send you this video. This is a preview of Palantir's second quarter earnings. Palantir will announce its earnings results in early August, and Palantir's earnings results are very important because if the results are even a little disappointing, the stock price could drop significantly right away. So let's take a look at whether the upcoming earnings results will once again show tremendous growth and help maintain or even boost the stock price. That's it for today's broadcast. If today's broadcast was even a little bit helpful for your investment activities, please don't forget to leave a valuable like and a comment. I would really appreciate it. Your comments have a tremendously positive impact on the growth of the Mijun YouTube channel. Let's all keep fighting together until the day we all retire from investing in United States stocks. Have a happy day. Thank you.
Hello, Mijun family. These days, the artificial intelligence revolution, how far do you think this will go? NVIDIA ushered in the artificial intelligence learning era, and now we're entering a phase where artificial intelligence is applied in real work, the era of inference and application. Many analyses support this view. So today, the material we're going to take a closer look at is about a company that's really getting a lot of attention in this phase of artificial intelligence and artificial intelligence application. It's an analysis article about Palantir, Palantir's recent performance and the outlook for this quarter's earnings, which will be announced soon. This company has an artificial intelligence platform called Artificial Intelligence Platform. We'll tell you exactly why this is even being called a game changer, focusing on the key points. All right, then let's dig into it together. Yes.
Recently, Palantir announced its first quarter earnings, and it really shocked the market. Revenue increased by 39% compared to last year, reaching about $884 million, which is about 2.7% higher than expected. In particular, the commercial sector grew by 33% and the government sector by 45%. Both sides showed even faster growth.
Wow, both sides?
Yes, I think the main reasons were the rapid adoption of strong artificial intelligence platform and the strengthening of relations with the United States and the Northern Hemisphere.
The top 20 customers, sales also increased by 26%, reaching $70 million per customer, so the core customer base is becoming more and more solid. So we can take this as a positive sign.
That's right. And there's an indicator that shows profitability called the Rule of 40 score. The combined revenue growth rate and profit margin came out to 83%. In the enterprise software sector, that's an incredibly outstanding figure.
83%, that's amazing.
That's right, but what's interesting is that Palantir's guidance for the second quarter was a bit cautious.
Oh, really? The earnings were good though.
Yes, the revenue was expected to be between $934 million and $938 million, and the operating profit based on Big App was expected to be between $401 million and $405 million. So it basically signaled that the growth rate might slow down a bit compared to the first quarter.
So you have a different perspective than the article's analysis. You believe the acceleration trend may persist.
Yes, that's right. Unlike this analysis, if Palantir just slightly exceeds its guidance, for example, if it achieves sales of $950 million and a Big App operating profit of about $408 million, so if it exceeds the guidance by just about 1.3% and 3.2% respectively, some analysts say that the acceleration trend would be maintained. Looking at Palantir's past earnings patterns and the current atmosphere in the artificial intelligence market, it's considered a fully achievable goal.
That part is directly linked to the analysis's main argument. Artificial intelligence platform is the new compute unified device architecture. That analogy sounds pretty powerful. What exactly does it mean?
Yes, you know NVIDIA's Compute Unified Device Architecture platform. It created an ecosystem that developers can hardly escape from during the artificial intelligence model training stage.
That's right, it almost became a standard, yes.
Just like that, Palantir's artificial intelligence platform is expected to play a similar role in the stage of applying and inferring artificial intelligence models in real business operations. So, in order to improve operational efficiency and generate profit by adopting artificial intelligence, you need a unified platform like Artificial Intelligence P. Once this is deeply integrated into the system, it can become a core infrastructure that's hard to replace, like Compute Unified Device Architecture.
You're expecting a strong lock-in effect, right?
You're saying that it could go beyond just being good software and become an essential element that companies can't operate without.
Advanced Micro Devices Chief Executive Officer Lisa Su also said that. They predicted that the artificial intelligence-related market will grow to over $500 billion by 2028, so you could say that the opportunities open to Artificial Intelligence P are really tremendous.
That's right. In addition, the recently passed defense budget increase bill is called the One Big Beautiful Bill. This will invest about $156 billion more, creating a very positive environment for Palantir's major client, the Department of Defense's relief-related projects. So, you can see that both wings, the government side and the commercial side, have the potential to become stronger.
It seems like we're only hearing good things, but what still bothers me is the stock price level. The forward price to earnings ratio based on expected future earnings is as high as 270 times. No matter how good the growth potential is, isn't this a really burdensome figure?
That's right. This year,
the price to earnings ratio increased by 70%, with 51% attributed to investors' expectations and optimism, according to an analysis I saw. Yes.
You saw it exactly right. It's true that the valuation burden is quite significant. Recently, investment banks like Mizuho and Wedbush have raised their target prices to $135 and $160 respectively, and especially Wedbush said that Palantir is on the golden path to becoming the next generation Oracle. They expressed their expectations in such strong terms. However, the average target price on Wall Street is still lower than the current stock price. It's staying around $105, so
So, what does the analyst who wrote this article think is the fair value? This?
the analyst ran their own model and predicted that in 2027, Palantir will have about $6.5 billion in revenue and achieve an adjusted operating margin of around 56.4%.
In 2027,
By applying Palantir's price-to-earnings ratio, they calculated a target stock price of around $149.
if it's $149, that's almost the same as the current stock price, right?
It's almost the same as the current stock price. In the end,
We have to see it as the current stock price already reflecting a lot of future growth. The biggest risk factor is definitely that high valuation itself.
that's right. Whenever the market sentiment changes, there's a risk that the price-to-earnings ratio could drop sharply. This is called multiple reversion risk, and it definitely exists. Wall Street analysts also have a very broad range of target prices. The highest and lowest target prices differ by up to 75%. What this means is that it's that difficult to evaluate Palantir's artificial intelligence competitive edge, or what people often call the depth of its moat.
So even among experts, opinions are really divided, right?
That's right, even so,
Despite the concerns, the analyst kept a buy recommendation. What was their rationale for this decision? Yes,
in conclusion, he sees Palantir as one of the clear winners in the second wave of the artificial intelligence revolution, that is, in the artificial intelligence adoption phase. And since the market's interest in artificial intelligence is so hot right now, he judged that the upward momentum in the stock price is likely to continue until that cools down. There are definitely risks, but he still sees the opportunities as greater.
so today we've taken a look at the analysis of Palantir together. Really impressive growth in the first quarter. And the potential of the artificial intelligence platform, it could become the next compute unified device architecture with such tremendous expectations. But at the same time, there's that dizzying level of valuation and the risks that come with it. Still, there's hope that it will become a core company in the era of artificial intelligence adoption. It also seems like the debate over whether it's overvalued is very intense right now. Now, I'd like to ask you all a question. Can Palantir really establish itself as an essential core platform in the artificial intelligence era, just like NVIDIA? Or is the current high level of anticipation perhaps a bit overheated? It might also be interesting to seriously think about how the next chapter of this artificial intelligence revolution will unfold. Yes,
That's all for our exploration today. Next time, we'll be back with more fascinating information to satisfy your intellectual curiosity. Thank you, Bigju and family.